Hi everyone, I'm Irk, and this is my channel Get Irked, where I teach people how to invest for the long term. In today's video, we're going to talk about Bitcoin versus gold. When it comes to the Bitcoin versus gold debate, I like to subscribe to a stock market adage which says, I'd rather be rich than right. There are people all over the place in the stock market who really want you to believe their thesis, and that's fine. If that's how you want to invest, that's perfectly okay. But I'm a kid of the 70s and the 80s, and I remember all the kids in middle school fighting about which was better, the Sega Genesis or the Super Nintendo, and my logic was, if you could afford both, why not just buy both, and then you have the best of both worlds. And that's the same thing with gold and Bitcoin. There are a lot of Bitcoiners who believe gold's going to go to zero, and there are more than enough gold bugs who think Bitcoin is going to zero. That's fine, but why not just own both, just in case one does and the other one doesn't? The reason I say you should own both Bitcoin and gold is that they serve as a hedge against each other, as well as a hedge against inflation and the entire global economy printing money and devaluing currency. If either of them fail, you'll be happy that you had the backup of owning the other one. It's better than putting all your eggs in one basket. Now, I've heard a lot of people reference Warren Buffett's quote, it's best to have all your eggs in one basket and watch the basket very carefully. But are you Warren Buffett? What you don't hear is all the people who've done that and failed miserably. You've probably heard of a few fiascos over the years that resulted in people losing their entire money. For example, most Enron employees at the turn of the century had every single part of their retirement in Enron stock, which went to zero. Diversification is the only way you can prevent having that kind of thing happen to your portfolio. Sure, if something goes up dramatically and you're fully exposed to it, you're going to see better gains. But if whatever you choose as the horse you're going to ride for your entire retirement fails, then you can't retire. And life doesn't give you a second chance. You've only got a certain amount of time on this planet, and if you want to be able to build wealth, you need to do it carefully. Bitcoin is a cryptocurrency. Instead of giving you a huge primer on exactly what cryptocurrencies are, basically they are digital assets that each have their own identifying number that are tracked by a network of computers that hold something called the ledger. If I pay you 1 Bitcoin, then these computers have to verify that I hold that Bitcoin. The transaction has to be confirmed at least 6 times by 6 individual computers before it even makes it into the ledger, and then all of the rest of the computers on the network must also confirm that transaction has taken place. It's digital money where instead of having Visa or a credit card company or your bank track the different transactions that you have to ensure that you have the credit rating that you should have or that you have the money in the bank account, the network itself tracks whether or not you have the Bitcoin that you're claiming to have and that you're going to use in a transaction. Like gold, Bitcoin has scarcity. It's been limited to 22 million Bitcoin that will ever be produced. In addition to that, millions of those have already been lost, either because they're on cold wallets where the person has lost the keys and passwords, or they were confiscated by the FBI, who also doesn't have the keys or passwords. So millions of Bitcoin are off network. So we're talking about an estimated 17 million Bitcoin and 171,000 tons of gold. Let's talk about the two of them in terms of scarcity. If you're talking about Bitcoin with only 17.6 million versus 171,000 tons of gold, you might think, wow, Bitcoin is definitely more scarce because there's 7.8 billion people on the planet. There's no way with only 17.6 million Bitcoin that everybody can have one. Whereas with 171,000 tons of gold, everybody should be able to have some, right? Well, let's take a look at it. So the smallest denomination of gold is a 1/20th gold coin. And the one we're going to use is the Canadian maple leaf because the American eagle does not come in a denomination that small. If all of the gold in the world was broken down into 1/20th of an ounce coins, we would have 109 trillion coins, which works out to each person in the entire planet being able to receive about 14 coins. That seems like a lot, doesn't it? With Bitcoin, only 17.6 million might seem like there isn't enough out there. And a lot of Bitcoiners will skip this next part when they're talking about how scarce Bitcoin is. Bitcoin is actually made up of Satoshis, and currently 100 million Satoshis go into one Bitcoin. That's a 1 with 8 zeros at the end of it, with each Bitcoin holding 100 million Satoshis. Even taking into account the Bitcoin that have been lost forever, there are 1.76 quadrillion Satoshis. That means that even if Bitcoin was divided evenly with every person on the planet getting some, each person would get 225,000 Satoshis. To make matters even more interesting, the code in Bitcoin can be converted, if agreed upon by the network, to have even more divisibility, which means it can go out way past 1/100 millionth. In fact, if you look at it in those terms, and you look at it in terms of Satoshi instead of terms of Bitcoin, it's infinitely divisible, which kind of takes some of its scarcity away. So when you're talking about the asset of gold and you're talking about the asset of Bitcoin, the one that is truly more scarce, at least currently, is gold. Let's say you want to get started and you want to get yourself some gold and some Bitcoin. How would you go about doing it? You have to remember, when it comes to Bitcoin, while there are services like Robinhood and PayPal and Square that let you buy Bitcoin, you want to hold the physical keys. You want to be able to transfer your Bitcoin off network. PayPal and Robinhood don't let you do this. You have to leave the Bitcoin on their network. Square will let you take the Bitcoin off their network, but they have a 1.75% fee to do so. So what's the alternative? Crypto exchanges. Now, you've probably heard of Coinbase. You may have seen my video about Coinbase. I don't recommend you go with them. I recommend you go with Gemini. Now, while there is a third exchange in the United States called Kraken, it's not currently insuring your US dollars against hacking or theft. So I only invest with brokers that have that SIPC insurance. That means I won't lose my cash if they get hacked. So Gemini is the better choice because Coinbase's fees are nearly double what Gemini's are. There's a referral link below where if you spend $100 on Gemini, we both get some free Bitcoin. So feel free to use that. Feel free not to use that. It's entirely up to you. In order to get an account on an exchange like Gemini, you need a driver's license, a social security number, and a checking account or savings account. So it makes it a little challenging to get started. However, it's just as challenging to get a stockbroker account where you can buy gold on the stock exchange, whether you're buying gold ETFs or gold mining. So they're about even when it comes to difficulty. If you're talking about buying physical gold, you want the gold coins or the gold bars, it's relatively easy to go about doing this as well. There are a lot of brokers. There are some that will be local to you, and then there are online brokers. Personally, I find that jmbullion.com seems to have the most reasonable premiums out of anything I can find in my area. I live in the Portland, Pacific Northwest area, and my local brokers can't even get close to the premiums that JM Bullion offers. So it is cheaper online. You might be asking yourself, what's a premium? Because gold has a spot price. For example, it's currently in the upper 1700s. However, you can't buy an ounce of gold for the spot price because it costs money for the mint to actually make that gold into a coin. In addition, the brokers also need to make money because it's a business, so the premium that you pay is a certain amount over the spot price. To make matters even more fun, the more popular or scarce gold is at that time, the higher the premium will be. So right now, we're seeing a limitation, particularly on silver, but also on gold, on how many coins are available. Therefore, the premium is often a lot higher. In fact, if you're talking about a silver coin, the premium right now is 50% over spot if you want to buy one 1-ounce coin of silver. When it comes to buying physical gold, I recommend sticking with the main companies and countries that you know. And for me, I like the American Eagle and I like the Maple Leaf from Canada. If it's from the United States Mint or if it's from the Canadian Mint, it's trusted worldwide. Now, while holding physical gold is good in case you have an emergency and you need to leave the country or something, you can grab your gold and have something of value with you. And you can do the same with Bitcoin. So transport is really kind of nice when it comes to those two. Naturally, if you have a lot of money, Bitcoin is easier to transport because you just need to bring your crypto wallet with you. This one's a Trezor. I also have ledgers, and that's it. You have this. It's got pins and keys to make it so that nobody can break into it. I can plug it into any computer and be able to access my Bitcoin. Whereas if you're talking about gold, you have to take the physical weight. And if you have a lot of wealth, then it's going to be heavier and heavier. Gold's not really a good example, since 1 ounce of gold, if you're talking about a coin, is about $2,000 US right now. It would be better to make that comparison to silver. A 1 ounce silver coin is around $40 right now. For me, when it comes to putting all of my money into a single asset, I have a rule that I always hold on to. You don't ever want to be dead right. This is what happens if you have the right of way on your motorcycle. You decide to cross a stop sign even though there's cross traffic coming. They don't stop, they hit and kill you, and you're dead. You're right, you had the right of way, but you're dead right, and that's not valuable. I take the same approach to putting all of my money into one asset. If you're one of those people who says, well, if there's an apocalypse, I want all my money in gold because it will continue to have value, that's great, but do you want to live in a world post-apocalypse? I really don't want to. And to me, that's the equivalent of being dead right. The same thing with Bitcoin. Even if all of the governments in the world allowed Bitcoin to become the primary currency, if the economies all collapsed to the extent that they would have to, where Bitcoin would become that currency, it would probably not be a world you'd want to live in. Let's talk about risks facing both of these asset classes. As for gold, it's been banned before, and even though it's unlikely, it could be banned again. Franklin D. Roosevelt made it illegal for any American to hold gold, and all Americans had to change their gold into US dollars. At that point, from 1934 into the early 1970s, Americans could hold gold as jewelry, but it was illegal to hold the coins or the bars. Now, since the decision in the 1970s, it has been legal for us to hold gold and silver once more. However, there's no reason, even though it's unlikely, that the government wouldn't ban it again. It's totally possible. Now, as for Bitcoin, Bitcoiners will tell you that the network can't ever be shut down. And while that is true, they don't need to shut down the network in order for a government to ban Bitcoin. All they have to do is ban the citizens from using Bitcoin to transact. And even if you told me that you would take the risk and still hold on to your Bitcoin and other cryptocurrency, where are you going to spend it? Most of the major companies and individuals will refuse to take it, which means Bitcoin's value will drop significantly at that point, and the US government just effectively banned it by making it so that it's just illegal for you to transact in it or hold it. Bitcoin actually has two more risks from the government. Whereas gold has become a commonplace investment and governments don't really care about it as much anymore, Bitcoin can undermine a country's fiat currency or the paper-based currency that a country prints. Bitcoiners will tell you the end goal is to have Bitcoin become the currency of the entire world. However, so much of the power of a country is wrapped up in its own control of its fiat currency that if Bitcoin increases in value too fast, you may see a government or multiple governments come up against it. Additionally, Bitcoin uses a significant amount of electricity. In fact, at the last count, Bitcoin uses as much electricity in 1 year as the entire country of New Zealand, a country whose population is over 5 million people. That is one of the most anti-environmental concepts that you can possibly pose against cryptocurrency. In fact, it's hard to know whether gold mining produces as much carbon footprint as Bitcoin mining does. Unless Bitcoiners can get together and make the system more efficient, it could be very easy in the environmental era we're entering into for a country to want to ban Bitcoin because of the amount of power and pollution the network produces. Bitcoiners will tell you the problem with gold is that one day asteroid mining will be a thing, and suddenly there will be no scarcity of gold because we'll just be able to get whatever we need from space. Now, while that's a true possibility, I'll also make the argument that nothing ever goes to zero in value. Even if there's a lot of gold now around on the planet, there will be more industrial uses. It will pick up in use of electricity because it is one of the, if not the most conductive metal for electricity, which means the gold you hold will still have a value, even if it significantly drops. When you're thinking about asteroid mining, you're probably also thinking about Elon Musk, who has spotted an asteroid that has approximately 700 quintillion worth of gold on it, and is talking about having an explorative trip in 2022. However, Elon Musk has a history of making huge claims that don't pay off immediately in the time frame that he says them. Even he in other interviews has said that at the earliest we wouldn't be able to do any real asteroid mining for up to 100 years. So asteroid mining, not necessarily a big risk against gold. When you're talking about ethereal risks against Bitcoin or other cryptocurrencies, there are two that are very worrisome. One is called the double spend. What this means is one single identifiable Bitcoin is used to pay two different people in two different transactions. The double spend would invalidate the ledger and seriously diminish any kind of faith in Bitcoin as an asset. Now, while this is protected against, it's still potentially possible that this could happen in any cryptocurrency. And if it does, it's likely that cryptocurrency's value will drop significantly, if not go to zero right away. The second risk facing Bitcoin and other cryptocurrencies is hacking. Now, people have been trying since 2012 to hack Bitcoin repeatedly and with lots of effort, and no one's been able to make a difference that the ledger wasn't able to immediately catch and fix. But here's the problem. Quantum computing is becoming a very real thing. And every time we've ever said this can't be hacked, eventually somebody hacks it. So what happens if Bitcoin gets hacked? The Bitcoiners will tell you that they would get together, analyze where the weakness in the code was, and create a new Bitcoin, and then fork or split the Bitcoin from where the hack took place. So they would come back to before the hack, they would take all that data, and suddenly all those people would now hold Bitcoin 2.0, or whatever the name would be. The problem with that logic is how much faith does the public have if that happens? We had our monetary system almost completely collapse in 2008, and people still keep their money in the bank, so maybe Bitcoin survives and is able to maintain its value. On the flip side, a hack shows a serious weakness in the code and the entire concept of it, and Bitcoin could go to zero. But as I've said about gold, in the same way with Bitcoin, that is an extremely low risk. So there you have it. Those are some pros and cons to both Bitcoin and gold. But like I said at the top of the video, I hold both of them. The amount that you should hold in your portfolio to make it so that you're diversified is completely a personal decision and totally up to you. As I always say, I'm not a professional advisor, and you should probably consult with one. However, if you listen to experts like Jim Cramer from CNBC's Mad Money, he's recently changed his perspective, and instead of holding 10% of your portfolio in gold as a hedge against inflation, he recommends holding 5% in gold and 5% in Bitcoin. But whatever you choose to do, you have to be comfortable with.